Financial markets are done as we know them, or at least they're dead man walking, so to speak. Technology, it's changing things super fast, and the financial markets are next. They're next on the list to what we call creative destruction. New things kill the old. And in this video, I'm going to explain what's happening in the finance industry, how it works, how you can use it, and then, of course, who the players are to watch. So stay tuned. All right, welcome back to the channel. My name is Mark Moss. I like to talk about making money. I like to talk about investing our money, different types of asset classes, different types of strategies, and just, having overall success in life. If you like those types of topics, which I'm sure you do, please click the like button right now. I'll wait. All right, and click the subscribe button, hit the bell notification so you're notified every time I put a new video out. Now, today we are talking about the death of the financial system as we know it. And it's just one of many things that we're seeing the death of, right? I talked about creative destruction. That term means that when something new is created, it kills something else. Now, a lot of people want to prevent creative destruction. They want to keep the old system intact, but unfortunately, that just doesn't happen, okay? And right now, there's lots of things that are happening. Obviously, technology is moving really fast, and one of them is the financial system. Now, you might have heard the term DeFi. DeFi is so hot right now. It's all over the news. Big news about the DeFi space really ran through not just the DeFi space, but the entire financial space just in the last couple of weeks on big news of a company called Compound. And they launched a new cryptocurrency token called Comp, and it jumped about 250%, almost 300% in just a couple of days. Now, maybe you haven't heard about it. I get it. It's still pretty niche, although it's growing super fast. But a lot of people maybe heard about it. I've got a lot of requests of people asking me to cover the DeFi space, to cover what's happening. And so that's what we're doing. I listen to your comments. So leave those comments down below. And I always love to hear your feedback. And so that's why I'm doing this video and explain what this is. Now, I've talked about this a few times before. We're going to go a little bit deeper. And I want to explain to you what it is. I want to talk about different ways that you can use it. And really, of course, I'm always trying to give you the information so you can benefit from this. And so how can you take advantage of the boom? Who should you be watching? And so forth. And so, like I said, it's kind of an obscure little niche, but it's actually not. Okay, I can assure you that it's very, very real. As a matter of fact, there's over 1.7 billion, B with the B, billion with a B, $1.7 billion that are locked up into this new decentralized finance space, into this new niche. So I know, I get it, 1.7 billion, that's tiny in comparison to, the overall financial markets, that's hundreds of trillions of dollars. I get it. But 1.7 billion, it's not a small number. That's a pretty big number, especially to be locked up in this brand new space. That's really new. As a matter of fact, it's grown over 300% in just the last 4 months. I mean, it is catching on. And of course, if you know anything about investing, you want to get in early. You want to catch the trends early. And we're talking about that right now. It's already big. It's already proven itself. 1.7 billion, 300% in the last 4 months. It's growing. So it's super real. It's happening. And you need to pay attention. So I'm going to break this down into 3 basic categories to make it easy. All right. And I want to make it easy for you to follow along. Now, I'm not following my good buddy, George Gammon. It just so happens I have 3 categories to break it down into. Sorry, George. Anyway, so first and foremost, the first category we're going to talk about is what is DeFi? And more importantly, why? Right? I like to talk about what, but why? Why do we even care? Why do we need it? So obviously, I talk about finance on this channel. The US, the United States, we financialized everything. We've gotten rid of our middle class. We don't make anything anymore. We just finance everything. The whole thing's financialized, but it's all centralized. All right? It's all centralized. What does that mean? Well, that means we have central authorities that basically control everything. So we have the central bank, and the central bank, they control our money supply. They control our interest rates, right? They control all those things. We use centralized banks like Wells Fargo, Bank of America, JP Morgan. We use them to store our money. We use them to handle our payments, sending, receiving payments. We use them to give us loans, for credit cards, autos, houses, things like that. We use centralized investment companies like Fidelity, E-Trade, Charles Schwab. We use them to invest and to trade. In all those instances, the players involved that I just named, they're all centralized. Now, what does that mean? That means all the power is concentrated into one person, one company, one group, et cetera, or a small group of people. And because of this, they're centralized and they control everything. They require permission, all right? They require permission to be involved. They require permission to open an account. You have to fill out forms. You have to provide paperwork. You have to provide all these things. You have to meet their requirements, which a lot of people don't. You have to get permission to invest. You have to get permission to take a loan, right? You have to have permission for everything. Now, many cases, even to deposit and withdraw your own money, you have to get permission. Go to the bank and see if you can pull out $30,000 and see if you need permission. Go to the bank and try and deposit $30,000 and see if you need permission. Now, we give them our assets. We give the banks our assets. We give these investment companies our assets, and we give them our trust at the same time, right? So we're giving them our assets and we're trusting them not to steal it or screw us over with it, right? And we hope that they honor that trust. But time after time after time, we find that we can't trust them. We find that over and over and over, they violate that trust. As a matter of fact, the central banks, they print endless amounts of money. We trust them to manage our money, but yet they're printing trillions of dollars, stealing our wealth, right? Through inflation, they're stealing the value of our money. The banks like Wells Fargo, we trust them, but what do? They rack up fake accounts. They rack up all these fake charges. As a matter of fact, Wells Fargo paid out, was it $50 billion or some crazy number like that? It was like more profit than they made over the last decade, and they had to pay that out to settle these cases of fraud against us, right? We've trusted them. And they just, things just continue to get worse and worse and worse. Your bank or financial company, they might not even take your cash, like I said. Good luck showing up with a bunch of money, see if they'll take it, right? They can deny your request to withdraw it, right? You have to ask, if it's a big enough amount of money, you have to ask permission. They have to take sometimes days or even weeks to get that. And it's more than that. There's about 2 billion people in the world that can't even get access to enter the financial system. That's how permissioned it is. 2 billion people, they're cut out. So the bottom line is the centralized model, it requires trust, right? And they've proven that they don't deserve the trust. It requires permission, and they can choose who to give and who to take. And so as you can see, there's a lot of problems with that model. So welcome to decentralized finance, all right? And just like the name says, it's decentralized, right? So what that basically means is there's no central administrator. There's no central entity that we have to trust. There's no central entity to ask permission. And this is all being built on top of the blockchain, all right? Cryptocurrency, Bitcoin, the blockchain, I'm sure you've heard about that. And just like the main centralized financial products, the main financial products that we use would be deposits, payments, and loans, right? That's what you use your bank for. Hold your money, handle your payments in and out, give me loans, right? And just like that, decentralized finance on the DeFi platforms gives you the exact same options, only these options are now trustless. I don't have to trust the central bank, and permissionless. I don't have to get permission. I can do deposits, payments, and loans without needing any permission. And instead of having a centralized company and a centralized control, centralized people, instead we have code. We have computer code. We have smart contracts. We have protocols. All right. And to use, we use our digital assets on this, our cryptocurrencies, and it's all built on open source blockchain technology. So now you know what DeFi is. You know why it's important. So now let's move into the second bit, not step number 2, the second phase, and we're going to talk about how it's structured. All right. So if we go back to the basics and we look at the financial system, like I said, we have deposits, we have payments, and we have lending, right? Those are the 3 things. And so Bitcoin already takes care of that. I'm a big fan of Bitcoin. I started this channel to talk about Bitcoin. I want to tell everybody about Bitcoin. It's a big piece of what I do, and Bitcoin takes care of that. Bitcoin takes care of the deposits. Now I can hold my own Bitcoin on my own wallet. I don't need a bank. It handles my payments. In my wallet, I can handle sending money and receiving money. So I can already do the deposits and the payments. However, I don't have the loans, right? I can already be self-sovereign. I can control my money. I can take my deposits. I can do all those things, but I can't do the loans. There's no lending there. And so that, Bitcoin took care of that. That's what it's designed for. But Ethereum is another blockchain. And people ask me why I don't talk about Ethereum. I used to talk about it quite a bit, but Ethereum is a different blockchain. And it's similar in a sense to Bitcoin. And I'm not going to go through that in this video. If you want to know more, leave me comments down below. We can go deeper. But it's similar in a sense that it's an open source blockchain, but it's optimized for different things than Bitcoin. All right. So primarily what it's optimized for is more of a programmable programmable money. All right. So it uses something called smart contracts, which is basically programmable money, right? You can program them. So you can program the Ethereum tokens to work, and it works off of logic. So like it's if this, then that. If this happens, then this happens, right? So it's like a logic that happens, and it's a protocol. It's the code. It's the smart contracts. And basically this allows for the third level of financial products to be built, the loans, the lending. And that's a big piece that Bitcoin can't do, not just giving, but also receiving the loans. And you may not know this, but you should, that whenever you deposit your money in a bank, it's not your money anymore. Instead, you're lending the money to the bank, and they technically owe it to you. All right. Now, this is a big point. Most people don't understand this. Your money in the bank is not yours. They owe you the money. And legally, that's a big problem. In case they go bankrupt, it's not your property. I'm not going to go into that right now. Leave me a comment if you want more. But technically, they owe it to you. Now, they're holding it for you safely, but what they're doing is they're loaning it out to other people. So when you go to the bank to get a credit card, you go to the bank to get an auto loan, you go to the bank to get a loan for your house, the bank is loaning you money that was partially from deposits of other people, right? Business lines of credit, whatever it may be. Now, you probably already know that the bank doesn't really pay you any money for that. Now, it used to be they did. It used to be they paid you a good amount of interest. So in exchange for you loaning the money, or in exchange for you parking your money there, they used to pay you good interest. Today, they pay you about 0.05 or 6, like not even a point, half a point, right? And you would think, well, that's because they're not getting much, but that would be wrong. As a matter of fact, the average loan rate that the banks charge is 17%. So they're making 17% with your money, and they're giving you basically zero. It doesn't seem very fair, does it? Now, there's a bunch of different like peer-to-peer lending platforms that are set up to basically kind of get outside the bank. And so this is like a peer-to-peer lending. It's like matchmaker services where they match up borrowers and lenders. One of the biggest ones, the Lending Club, they match up borrowers and lenders, and they pay out a much more fair rate. So now borrowers get better rates and lenders get better rates, all right? But it's still a centralized model. And with the central administrator running it, it causes risk. Not only does it cause risk, we have to worry about them doing something wrong, fraud, whatever. We also have higher fees. Of course, there's a whole business, there's a whole company, there's buildings, there's all these admin costs. And because there's all those admin costs, I have to pay more. And this is exactly what DeFi is replacing right now. Instead of using buildings and people and admin, they use code. They use protocols. Now there's several lending protocols that match, basically they match borrowers and sellers at the same time. And since it's just code, since it's just protocols, they do this matchmaking, the fees are really low. And because the fees are low, like I said, it's cheaper for the borrower and it's more profitable to be the lender at the same time. So while you're getting about 0% from your bank, in DeFi, you could get 4, 5, 8, even 10% on your money. And as a borrower, instead of borrowing at whatever on my credit card at 17% or my auto at 6, 7%, I could borrow it 3, 4, 5%. See, it's better on both sides. Now, these are all done, again, trustless and permissionless. So they're trustless. I don't have to trust a centralized entity not to screw me over. The code, and it's open source, and anybody can view the code. It's permissionless. I don't have to get permission. I don't have to fill out paperwork. I can do it all just over the computer. No bank forms to fill out, no waiting around for approvals, no risk of getting denied. Now, right now, these are only working for collateralized loans. So you have to basically deposit the collateral, like you deposit Bitcoin, you deposit Ethereum, something like that. You could deposit a US dollar stablecoin. I've talked about this in other videos, and you don't have to give up the asset, all right? So you deposit your Bitcoin, you deposit your Ethereum, you deposit your stablecoin, you deposit whatever collateral, and you receive back another coin in return. Now, most people, probably you, are going, well, if I already have the money, why would I put up the collateral to borrow money? That doesn't make any sense. I already have the money, right? Yes, okay, that's good logic, right? But I'm not gonna go through all the many reasons why you may want that. But just know that this happens, and it happens a lot. Like I said, $1.7 billion are locked up. So think about it like equity in your home, right? In a sense, right? So for example, you have a home, you have equity, and you would use an equity line to unlock some of the capital from the asset that you own without having to give up the asset. Does that make sense? So I already own Bitcoin, so I can put the Bitcoin there. I still own it, but now I'm earning interest on it. They're giving me money, or I'm taking a loan against it, and now I can use that money for something else, even though I still have that asset. Just like a home equity line is the best way I can explain it. And while you may not see that you have a need for it, there are lots of people that have a need for it. $1.7 billion worth. It's mostly used by investors and traders and things like that, where I know that I'm paying this interest rate for this collateralized loan. I'm paying 4%, but I can go make 20%. 2%. I'll gladly pay 4 when I can go make 20, and I'm sure you would too if you knew how, all right? So now that you know the structure, now you know how it's being used, let's look at a few players so you can understand exactly how this works. So first, you have to understand stablecoins, all right? Like I said, I've made videos about this. I'll link to them. So I've already made videos on stablecoins, but basically what they are is basically what they sound like. They're stable. Right? So they're basically pegged to another asset. They have some sort of code, some sort of protocol that keeps them stable. So typically with stable coins, what you would do is you would deposit like a real US dollar to somebody, and then you would receive back a token that's basically pegged to the dollar. And it's always going to maintain the value of that dollar. All right. But in that typical fashion, so I would get a Tether coin back, like a US dollar stable coin. And I've talked about using US dollar stable coins, but the thing to keep in mind is that's centralized. So now there's a central entity that's holding my dollars, all right? But we're talking about DeFi right here. We're talking about decentralized finance. And in the DeFi world, the decentralized finance world, there are no central parties. So you deposit your digital asset, your Bitcoin, your Ethereum token, whatever, and in exchange, you get back a new token that represents the dollar. And the protocol, the code, works to maintain the value to always hold at a dollar. Now, different ones work in different ways. I'm going to go through a couple of them. They work in different ways to maintain that, but that's what they're doing, all right? And now once you have this new stable coin, you can use it all throughout the DeFi ecosystem, the decentralized finance ecosystem. You can use it to lend, to borrow, to invest, to trade, however you want to use them, all right? The protocols, they work as the matchmaker to facilitate the borrowing and lending. Now, how much can you make by borrowing, lending, whatever? Well, it's based on a free market. So it's supply and demand, right? It depends. It's a matchmaking service. So it depends on the supply and demand of each. So as you would imagine, the more people that want to borrow, the higher the rates are going to go. The more people that want to lend, the rates are going to go down. So it just depends on what the supply and demand is. And so how it works is that you would start by depositing your digital token onto their platform. And in return, you receive back their native stable coin, all right? And then, like I said, you can earn interest on that token or use it anywhere else inside the ecosystem. So third and final stage, let's look at the 3 interesting projects, probably the two biggest projects, and then one that stands out very interesting. So the first one is MakerDAO. MakerDAO is the oldest, it's the most popular. When you deposit your digital assets, they give you back something called DAI. It's a new digital token called DAI, and this is their stable coin, and it's basically pegged to a dollar. They have a mechanism in the back in the protocol that maintains that value, and then you can use that DAI to earn interest on or whatever you want, all right? You can use it on MakerDAO, use it on other platforms. Now, another big one that's recently made a lot of news, what I opened up the show with, was I talking about Compound, and it launched their new token called Comp. And it just launched, it was June 16th. It launched at $93, and by June 20th, 4 days later, it was over $307, giving it a market cap, a complete market cap of that Comp token for almost $800 billion. Imagine that, $800 billion out of the gate, and it beat MakerDAO. MakerDAO's been around the longest, it's the biggest, and it took over the top spot. That was before it went all the way to 800, and then it crashed all the way back down to 491, at least at the time of this writing. Right above MakerDAO, which is at 455. So MakerDAO's 455, Comp's 491. They're both right there neck and neck. However, Comp is higher. Now, the price of the token going from about $100 up to $300, and then back down to about $200. So it's pretty volatile. Obviously, it's very new. It's still small, so it's going to be moving around a lot. Now, one thing to note is that almost the entire DeFi space is built on the Ethereum blockchain. I started out talking about that. So we have the Bitcoin blockchain, we have the Ethereum blockchain, we have thousands and thousands of other blockchains, but Ethereum is really the main blockchain for all the smart contracts, all the programmable money. It's the oldest blockchain protocol that has smart contracts, and the majority of the entire DeFi space, the majority of all the other cryptocurrencies are all built on the Ethereum blockchain. MakerDAO is built on it, Compound's built on it, everything in the DeFi space is built on it. All right, this brings me to the third and final player that I want to talk about, and the reason why I want to talk about them is because they are completely different than almost everyone else in the DeFi space, and so it's worth mentioning. They're new on the scene, they're already making a lot of noise, and it's called Kava. All right. Now, it's a lot more interesting because it's the only one that's not built on Ethereum. All right. Now, this could be good because it stands out and it's different. It could be bad because it's not in the ecosystem. I guess only time will tell, but it stands out and it's interesting because of this, because it's built on a different blockchain. And then, like I said, instead of being built on Ethereum, like all the other DeFi protocols that are out there, it's built on the Cosmos blockchain. All right. Now, I'm not going to get into Cosmos. So if you want to know, again, leave comments so we can go deeper into any of these subjects you want to know more about. So I'm not going to get into Cosmos, but what I'll tell you is that the Cosmos blockchain is designed to be what's called quote unquote interoperable. And basically what interoperable means is that it can interoperate. It can operate with all the other chains. So each blockchain kind of is on its own, which is why everything's built onto the Ethereum blockchain. But Cosmos is designed to be able to work with all the blockchains, work with Bitcoin, work with Ethereum, work with all these. And so by building on a Cosmos blockchain, they might be opening themselves up to work with a lot bigger projects, the entire space, as opposed just to Ethereum. Now, Kava is built on Cosmos, like I said, and because of this, it should be able to work with all the other blockchains. Right now, they're first starting out with BNB, the Binance token. Of course, if you're in the cryptocurrency space at all, you probably know who Binance is. It's like the largest exchange out there. They have their own chain, they have their own token. And so you can deposit Binance coins on there and receive back a token. It's also working with Bitcoin. It's working with XRP for all my XRP fans out there. And it's also working with Atom, which is their native token. All right. Like I said, for now, all of DeFi is on Ethereum, but the interoperability of the Cosmos chain makes me think that Kava could be onto something. Now, currently their protocol token is only like $1. It's $1.25 at the time of this writing, compared to $200 for Comp, compared to $450 for Maker. So maybe Kava's onto something. Like I said, because it's interoperable, we'll see. Could it be the next Comp? I don't know. Time will tell. But I love to see new things, and I love to see people trying to push the ecosystem. So I would just say bravo to Kava for working on the Cosmos chain. Okay, so now to recap, decentralized finance is basically, it's like peer-to-peer lending, all right? The rates you receive or pay are set by supply and demand, real time supply and demand. You exchange your crypto asset for a protocol stablecoin in return, and you can earn interest on that. Then you can use that token in the ecosystem to trade, to invest, or whatever you want to do. Now, a couple things to mention. You may have heard, like I said, I've done other videos on stablecoins. You heard me talk about crypto.com or Celsius or other platforms like that. And basically, it's kind of the same thing. I could give them my crypto coins, my Bitcoin, my Ethereum, my stablecoins, and they pay me interest, similar to what we're saying right now. The big difference is that, like I said, even though it's about the same thing, these are centralized versions. So crypto.com, for example, I mean, they make it super easy because it's a centralized model. They pay you a good rate, but it's centrally controlled. There's counterparty risk because there's a company. Somebody inside could do something malicious. They could go out of business, whatever could happen, all right? When I use Maker, when I use Compound, when I use Kava, these are decentralized, all right? So now that means there's no central party for permission, no one that could fraud me, no one that could steal my funds. But they have their own sets of risks, all right? Everything has risks in life. We always have to trade. We always have to look at the trade-offs of the risk. So what are the risks? Well, the protocol could have a bug in it. Someone could hack it. Someone could exploit the code in a way that I don't even know about yet. So we need to exercise caution with any of these, all right? Whether it's centralized like crypto.com or Celsius, whether it's decentralized like Maker or Kava, start small, learn the ins and outs, practice proper risk management all the time, all right? But know that this is big. This is happening right now. It's only going to grow faster and faster and faster. You do have the option to earn a real interest rate. It is possible. It's a tremendous need in today's age where the banks are basically paying us nothing. All right. Now, like I said, this was a very high level of what the decentralized space is all about. If you want to know more about specifics on any of this, just leave me a comment down below. Like I said, this video was done because of the comments that I've gotten. And if you want, I'll dig in deeper into any of the specifics. However, if you want instructions on how to use this, like exactly how do I use Maker and how do I do whatever, if you want instructions, I would just recommend that you go to the company's site and go through their instructions, all right? They have tons of instructions, they have tons of videos, and they're probably gonna do way better job, way more detail-oriented than I can do it. So if you wanna know exactly how to use it, go there. If you wanna know more concepts about what this space is, leave me a comment down below and let me know what you think. Do you think the DeFi space is here for real like I do, or do you think it's gonna be a passing fad? I'd love to hear comments. Leave me a thumbs up on this video if you like it. If you don't like the video, give me a thumbs down. That's okay. Either way, I always wanna know what you have to say. And that's it. To your success, I'm out.